Crypto Kids, the price of Bitcoin is repeating history exactly. You can see that when we overlay the current price action to the 2019 price action, which was a time where monetary policy is literally exactly the same as it is today. Bitcoin tops out 56 days before the end of quantitative tightening. Bitcoin has also topped out 56 days before the end of quantitative tightening in 2025. Here we were pivoting from quantitative tightening into soft QE. In 2026, we're pivoting from quantitative tightening into soft QE. The maximum drop from 2019 peak to the lowest point when we exclude COVID, because that was a black swan event, was 52.95%. From peak to the low in 2026 was also 52.5%, not 52.95, but regardless, in that 52% territory. So we're seeing a very, very, very similar price action unfold for Bitcoin. And I want to take this similarity, this repetitiveness, and give you a breakdown on what I think can happen next. I'll take a look at the Fear and Greed Index. We'll take a look at the 200 and 100 simple moving averages on the weekly time frame, and we will also go over a brand new trade I opened over on my Levex account for the price of Bitcoin, and that's going to be a short-term trade, a short-term price action trade. Guys, if that sounds interesting, then make sure to stay tuned until the very end of today's video. Make sure to subscribe to become a Crypto Kid for daily price updates and destroy the like button. If you want to get real-time updates on when I open trades and see exclusive posts, then go ahead and sign up to Levex using the second link in the description down below. After you sign up, it takes very little time to do so. Go to the search bar at the top, type in Crypto Kid, and you will be able to access my posts. When you sign up with a link in the description, you will see real-time updates to my trades and member exclusive features as well. You can trade Bitcoin perpetuals, altcoin perpetuals, CoinM margined or USD margined. You can do multi-trade, add to your existing trades, and so many more cool stuff that I will be making a tutorial video soon. If you want to see that, again, subscribe and stay tuned. I will get to my trade at the very end of this video, but first I want to congratulate you for surviving the 9th worst Bitcoin crash in history. The one above us was a 55% crash in 2021 from 64.8k to 28.2k. That was in the first ever this was in the first leg of Bitcoin's 2021 price action. We experienced a big capitulation. That was the 8th largest Bitcoin capitulation. Here we're experiencing the 9th largest Bitcoin capitulation. So congratulations. Now that we've gone through this though, what should we be expecting next? Well, we pointed out the very obvious similarity in the intro for today's updates, that Bitcoin topped out 2 months before QT ended in 2019. The same thing happened in this cycle. You're going from QT ending to soft QE. Same thing is taking place, and even the drops from peak to low are basically identical. So when we put those into account, then the reality is we're probably going to continue bearishness for Bitcoin for the next couple of months until more liquidity is introduced, and that liquidity funnels into the risk on markets, and that does take anywhere from half a year to a year. And when we go to the short term and take a look at that immediate short term, it's possible we get a rally in March, because historically speaking, in March, 2 years after the halving, you do tend to see a little bit of a rally. You got that rally in March of 2022. Bitcoin rallied and then saw a more major decline. Even in the 2017 cycle, Bitcoin rallied into March and then saw a more major decline. So it's possible that in March we see a little bit of a bounce, and that's why I wanted to go ahead and add more to my Bitcoin long trade, which is going to be a long-term accumulation trade that has only 2x leverage. You see, in the very short term, we're in this triangle. If we break the support, I think we will come back to the 62s. If we break above, then we can head towards the CME gap at the $83,000 range. Simple as. But I'm not FOMOing in. Like I said, I expect this bearishness to continue even if we see a bounce in March. And actually, when we take a look at the Fear and Greed Index, back in 5th of February 2018, you hit an extreme fear level of 8. And recently, 2 days ago, we hit an extreme fear level of 6. That corresponds with this week here, and that corresponds with this wick here. Both of these turn out to be hammer reversal candles. This candle will close in 2 hours time, and it will close as a hammer reversal candle. Again, similarities from that end. You got a bounce into March, but Bitcoin drifted around and actually ended up falling more, and then identified a low at much lower price levels, and then reversed its course back into a new cycle. So I'm not FOMOing into anything. I'm keeping my expectation that the 49K is currently my absolute worst case scenario. I'm not saying it's going to happen or it's not going to happen. I'm just saying that the fact that we've tested the 200 simple moving average on the weekly is a sign that I think starting to accumulate now makes sense. That's why I started to open positions on Bitcoin over on Levex, and I will reintroduce positions on weeks too. But I don't think that we have a very high probability to go ahead and say, okay, the lowest of lows was established. So a rally in March is possible, but I think the bearishness is going to continue for longer, and that's sort of the expectation that I wanted to share with you here on today's updates video. So as the months go by, I'll be adding to my Bitcoin positions and my Ethereum positions. Ethereum bounced beautifully from the support line of this ascending triangle continuation pattern, which we said it would. Now, I jumped into an Ethereum long at around 1.9K, and once more I will add into this Ethereum position as the time passes by. Was that the lowest low for Ethereum? I cannot comment, but I do believe it is a good level to be accumulating Ethereum, because I believe in Ethereum in the long term. I believe in Bitcoin in the long term as well. And when we are at these extreme fear levels and testing very critical support from moving averages, and even price wise, it makes sense to start accumulating without FOMO, without going crazy with leverage. From, again, that's just from my experience, but a slow accumulation, I think, is the way to go, and that's exactly what I'm doing. Guys and girls, that concludes today's video. Please don't fall for big, major traditional finance media outlets and even banks on making crypto predictions. They always get it wrong. The Financial Times today posted an article saying that $69,000 for Bitcoin is too high, and that it's going to basically zero, and then they readjusted the title to $70,000 when Bitcoin jumped 1K over the course of Sunday. Yeah, so just don't look at these. Don't pay attention to the traditional financial market articles. Don't pay too much attention to what JP Morgan expects, what Standard Chartered expects. They really don't get it right. Guys, thank you for watching. Take care. Enjoy the Super Bowl, and I'll see you all on tomorrow's update video. Bye-bye.